Dear enthusiasts and shareholders of Tesla, this is your chance to get excited about the company and brace yourself for an incredible ride as we enter the exciting world of Tesla. The numbers that are on everyone's mind are delivery estimates and delivery numbers, so hold on tight as we dive into this from the perspective of one of Tesla's biggest bulls, the one and only Dan Ives. Now that we have that out of the way, let's get started. Have you ever wondered why people can't help but compare Tesla to other players like Rivian? It's all prompted by observing recent Rivian automobiles on the road, even though Rivian has really been creating a lot of talk with its astounding 15,000 deliveries. The narrative in this enormous arena of electric mobility has an intriguing turn. When we focus on the Pres moment, Tesla continues to be the undisputed titan, creating a powerful shadow with its astounding 435,000 deliveries. The stats are nothing short of remarkably. In only 1 year, Rivian's production line is expected to produce about 52,000 vehicles. One is a noteworthy accomplishment in and of itself, but what really steals the show is Tesla's bold goal to produce an astounding 1.8 million vehicles. This is more than just a number, it's a declaration of Tesla's unshakable dedication to completely changing the automotive industry, even though Tesla has definitely paved the way for Tesla with its early success. Tesla's scope and aspirations are very different. The electric pioneer is still setting the bar incredibly high and solidifying its position as the industry leader, but the Tesla saga is far from over as it continues to push boundaries, challenge conventions, and electrify the world in a variety of ways. The question on everyone's mind is, where does Tesla stand in all this competition? To those who doubt the company, we pose a challenge because of its unparalleled scale and global reach. Now, let's change gears and look at one of Tesla's biggest supporters. Dan, according to him, Tesla is in a class by itself, and here's why you should think so too in an event that is being closely followed and much anticipated. In the third quarter, Tesla made a big move on the automotive chessboard. The electric vehicle juggernaut planned the deployment of an astounding 435,059 vehicles, but when we dig into the specifics of this remarkable number, the story takes an intriguing turn. Despite being exceptional by most measures, it did not live up to Wall Street's enormous expectations. To put this into context, let's rewind a bit. In the previous quarter, Tesla was an unstoppable force, delivering an astonishing 466,000 vehicles. The assembly lines were operating at peak capacity, churning out innovation after innovation. It was a momentous period where Tesla appeared to be firing on all cylinders, showing the world its immense potential. Notably, this marked a significant leap forward as Tesla had produced a remarkable 479,000 vehicles in that same high-octane quarter. Fast forward to the third quarter and we find a modest dip of 7% in delivery numbers. While some may interpret this as a stumble, it's essential to recognize that Tesla's performance remains formidable by any standard. The electric giant's ability to consistently produce and deliver hundreds of thousands of vehicles showcases its enduring influence in the rapidly evolving automotive landscape. This episode underscores the relentless pursuit of excellence that defines Tesla's ethos. Even as they navigate the ebbs and flows of market expectations, Tesla is steadfast in its commitment to innovation and electrification. Let's hear what Dan, the extraordinary securities analyst, has to say about these numbers. What may seem like a brief pause is actually a strategic pivot toward an even brighter future where Tesla continues to push the envelope of what's possible in the world of sustainable transportation. He claims that the slight decline in Q3 earnings isn't shocking the Tesla team or its investors. But why does he think this way, and why should investors continue to believe in Tesla? That's the exciting secret we're going to reveal. So if you were thinking that this was the end of Tesla's road, think again. It might just be the beginning of an adventure in the direction of unbelievable success. That's an interesting narrative, isn't it? However, as we learn more about Tesla, analyst consensus dipped somewhat, reaching $461,000 units. This was a 2.5% decline that caused some market skepticism, but this is where the story becomes complicated. Pierre Fagu, a research analyst at New Street, had a different projection in mind. Citing a few elements that would change the game, he confidently forecasted 438,000 units. Fagu highlighted how disruptions can have a cascading impact by pointing to plant shutdowns as a major component in this possible miss. Tesla's decision to replace older sedan models with the new Model 3 in China and Europe was another aspect to consider. This FAGU estimate of 438,000 units was a 6% decrease from the extraordinary 466,000 units realized in Q2, but it was still an astounding 27% increase from the 344,000 units produced in the same quarter of 2022. Let's now turn our attention to Dan Ives, a well-known Tesla bull who has recently caused a stir in the stock market. He increased his price objective for Tesla by a significant $50, making it a daunting $350. His reasoning is that he just cares about the business. Knowledge that Tesla has proven ease emphasized Tesla's ability to profit from important assets, including its network of superchargers and its state-of-the-art self-driving technology. He sees something that others might be missing. He views Tesla's supercharger network as a lucrative opportunity, especially as the company expands collaborations with other EV manufacturers. Additionally, he envisions Tesla's profits continuing to soar once it rolls out its full self-driving technology on a larger scale. This praise is in response to Tesla's second quarter earnings report, which initially caused a 4% dip in its stock price during pre-market trading. Ives also acknowledged Tesla's triumphant price wars in China, the United States, and Europe. We're about to find out what exactly Dan Ives sees that others don't. In a recent interview, he acknowledged that macroeconomic factors like chip shortages and supply chain challenges have cast a shadow over global automotive production. Importantly, he emphasized that these challenges aren't exclusive to Tesla, rather, they affect the entire industry. It's important to keep that in mind. While traditional automakers struggle to keep up with Tesla's price cuts, the electric vehicle giant marches forward, turning these price wars into home runs. Ives vehemently maintained that it's imperative to look as a shrewd investor. He stressed that while Q3 delivery figures may have fallen slightly short of expectations, they are just a blip on the larger trend of Tesla's growth and market dominance. He stressed that Tesla remains at the forefront of the EV market, primed for substantial growth in the years ahead. Beyond short-term delivery fluctuations, he stressed the importance of focusing on Tesla's long-term growth trajectory. In its most recent earnings report, Tesla reaffirmed that planned factory upgrades were the cause of the sequential drop in production. Significantly, the business restated its volume target for 2023, which is to reach about 1.8 million vehicles. This demonstrates Tesla's unwavering commitment to its long-term vision. The company has been the subject of scrutiny from a variety of analysts, particularly during uncertain times, but it's important to note that many of them have remained bullish, setting price targets for Tesla's stock over the next 12 months that range from $1,300 to $1,400 per share. The world is watching as we pivot toward the future, and it's important to take into account the opinions of these analysts regarding Tesla's growth trajectory. These analysts all share the belief that Tesla is well positioned to continue increasing its volume of sales. It would be premature to evaluate Tesla's performance exclusively on the basis of its Q3 delivery figures because the firm is more than just an automobile manufacturer. Even the most doubtful analysts acknowledge that Tesla is a revolutionary force in the automotive sector. Think about the plethora of projects that are in the works, such as the possibility of robots, the growth of the supercharger network, the possibility of robo-taxis, and revolutionary developments in battery technology. These innovations have the power to reshape the industry and bolster Tesla's leadership. We've explored the complex narrative of this electric giant as we wrap up our journey through the world of Tesla. If you found this discussion enlightening, please hit that like button and subscribe to Tesla Insights for more exciting updates. Today we've navigated through twists and turns, celebrating its monumental achievements while acknowledging the questions that arise along the way, from Tesla's staggering delivery numbers and its enduring dominance to the doubt surrounding its ambitious ventures. Thank you for watching this video with us.